Hey, what's up guys? So welcome back to another video on Trade Now, and for this video I'll be showing you guys one of the best 1-minute scalping strategies that I've identified for chasing trends and getting those pullbacks. But before we start this video, make sure to check out the link in the description box below. The link helps you to sign up for a fat ass account where you can earn up to $600 by just depositing, and right now they're having a lot of events for new beginners and the fees are as low as 0.02%, and currently I trade on the exchange, so I tested it out. Works perfectly and you guys can just check it out as well. So anyways, let's get into the strategy. I'm going to bring you guys through the indicators we'll be needing today. So first up, we'll be using your CM Ultimate multi-time frame. So go to indicators, search up CM, you'll see this CM underscore Ultimate underscore MA multi-time frame. So we are using this on a 1-minute chart, so you don't need to change any of the settings. You can see that we have this sort of trend following thing. It's similar to the EMA, but you can see that it helps you to tell when things are in an uptrend or in a downtrend. So when green clearly is we're in an uptrend, red we're clearly in a downtrend. So next up, what we'll be using is your Stochastic Rsi. So this is your signals to go long or short, and same things, default settings. And last of all, to give you your confirmation for your trade, we'll be using the cumulative delta volume. So if you guys are a frequent watcher on my channel, it's one of my favorite indicators to give me confirmation for me entering trades. So right now you can see that the trends are clearly defined, and I'm going to bring you guys how you'll be using this strategy to trade. So first up, we'll be looking at long positions and how to enter trades of long positions. So for you to enter long positions, firstly, the trend line must be green in color and the price must be above the trend line. So right here you can see that price is above the trend line and is green in color. And next up, we'll be waiting for a crossover of the blue Stochastic Rsi above the orange Stochastic Rsi, and this crossover must happen below the 20 line. So you can see right here is a perfect spot where you can see we have the crossover. You can see that price is above the line. And to give you a last confirmation, you look at your cumulative delta volume. You can see that it is green in color, so that is a valid entry signal. You can see that it matches all our conditions, and we enter on that. For stop loss wise, you can just put it below the recent swing low, and for this you want to aim either a 1:1 or a 1.5:1. So I prefer to have a 1.5:1, because even if you have a 50% win rate, you'll still be profitable. So there you can see that it's a valid position, and positions like this, you can see that where the crossover happens near to the 20 value, you can sort of take, but I wouldn't recommend because it is not a very reliable trade, and you want to wait for it to be oversold before you take that position. So let me show you guys another example. Let's see. Alright, the long side, if you just want to look at for the big trends, you can see that this helps to, you won't be taking a lot of trades, but when you take those trades will be winners. So this means that you have a high win rate, which is way better than just taking bulk amount of trades and not having a high win rate. So let me see for another position. So right here, this will be sort of valid. You can see that we have the price breaking above the trend line, and the trend line is green in color. Price has a crossover coming from the oversold level, and you can see right here it's coming from the oversold level, and we look at the cumulative delta volume, you see that that is a valid position. Although it's something you wouldn't really take because it just recently crossed the trend line, but it's a valid position based on the signals that and criteria that we are given. And there's another winning trade. Right here you can see that we have the crossover happens too high, so we will not be taking that. Right here is another winning trade. You can see that with the price breaking above the trend line, and trend line is green in color, we have the crossover happening near the 20 value area and breaking above, and our cumulative delta volume is green in color as well. So that is your valid position. Stop loss below the swing low, and we take a 1.5:1. So that is your signals for long entry. Now let's look at the signals to go short. So basically, short is everything opposite of the long position. You just want to wait for price to be below the trend line, and the trend line must be red in color. you must have the crossover of the blue line below the orange line, and the crossover must happen above the 80 value area. And next up, you must have a red candle on the cumulative delta volume signal. So let's see right here, you have a valid position. You can see that price is below the trend line and the trend line is red in color. You have the crossover of the blue line below the orange line, and our cumulative delta volume shows us red signal, which means that there are buyers in the market and we want to take that position. Stop loss, you can put it above the recent swing high, which is right there, and we take a 1.5:1. So valid position, you're going to look right here, we have another valid position, but however, since price is above the zone, you can see that price is not breaking below the trend line, there is not a valid position. Same thing here, price is above, so you wouldn't take that position. So let's look for more short position sides. You can see that so far, a lot of the signals that we've taken is all being filtered out. It's very hard for you to find trades that are losers because there's very little trades to be taken, and when the trades are taken, the win rates are very high. So right here you have another valid trade. You can see that the crossover of the blue line below the orange line, and the price is below the trend line, and the trend line is red in color. And we look at the cumulative delta volume, is changing from green to red, so we'll enter on the candle that changes red. So we won't enter on this candle where it's green, we'll enter on a candle that is red. So that is the valid position. Gonna enter right here, but unfortunately this will be our first loss. But usually if it moves down by 1:1 right here, I will move my stop loss there, so to prevent any losses. So that will probably be a break-even trade. Here we have another position, price is below the trend line, and the trend line is red in color, and we see that we have a red signal on this candle right here where the crossover happens, and that's a valid position, and we take a 1:1. So there we have another win. So there I've brought you guys through this trade. I'm pretty sure you guys know how to use this strategy now, and you can just test it out on using paper trading accounts before you actually trade, or you can use a link in the description box below to try out paper trading. They have on their exchange as well, so just check it out. This strategy is one of something I really like, because it really just follows the trend and you don't really have to take a lot of trades, and it helps you to minimize those bad trades. Because if you guys want to take a lot of trades and then you have a lot of winners, a lot of losses, it is still worse off compared to having a few trades and many winners. So yeah, that's it for this video. Hopefully you guys enjoyed. Thank you guys for watching, and see y'all in my other videos.